John Teixeira here with Teixeira Realty Group, RE/MAX Associates, and today I want to talk to you about what should be your step one toward becoming a homeowner or moving up to your next home. I often talk to clients that are looking at homes for the first time, and when I inquire about how they're going to pay for the home or whether or not they have been pre-qualified, I then often find out that they have not bothered to speak to a lender, or worse yet, they're talking to the wrong ones. I want to introduce to you my preferred lender, Trever Kerr with Gateway Mortgage. I've been working with him for over 10 years now, and he's the only one that I refer to my clients, and that is because I think he is the best in the business. So Trevor, thanks for doing this with us.
Not a problem. I'm glad you have me here.
Trevor, tell us about yourself, your company, and how you serve our clients.
Like you were saying, John, I've been in the business for a little over 15 years, been doing business with you for 10. The great thing about Gateway Mortgage and myself is the fact that we do everything in-house. We're not shipping your loan off to a processor over here and an underwriter over here. It's all done in my office.
Our clients really like that.
It's real nice because everything's all hands-on. We know what's going on with that person's file the entire time. Okay, and that's a huge advantage that we have over a lot of other lenders. Okay, the efficiencies that we have. I have my own underwriter that handles all of my files that I can go in and talk to, get in front of any time of day. So the other great thing about us is that we service your loan for life. So we can make some exceptions that a lot of other lenders can't.
That's awesome. So my understanding about that, though, is that while I'm making a payment every single month for 30 years, if I have a question about my loan, you're the one I go to, huh?
You can call me all the time.
I love it.
I can get those answers for you, or we do have a processing, service center as well that you can call.
That's great. That's pretty rare in your industry, isn't it?
It is.
Awesome. So Trevor, I want to talk about step one of the process. And one of the things that I always tell people that call me is about buying a home is that it's really important before they even start looking at homes, for them to understand the lending process. How much is their down payment? Will they qualify? And if they don't qualify, why don't they qualify? And so in light of that, tell us, how do you work with our clients in the beginning stage of the process as they're planning for their home purchase?
You're exactly correct, John. The number one thing for these clients to know is, first, do we qualify? Okay, and if they don't qualify, that's what I coach them into, helping them become a homeowner, whether it be 3 months down the road, 6 months, a year down the road, to let them know what they need to do. But it's not only how much they qualify for. I spend a lot of time with the clients knowing exactly where their comfort level is to make sure, that monthly payment-wise, they're in a position where they should be looking, which is very important, because even though they might qualify for a $300,000 home, they might only want payments on a $200,000 home,
right,
which saves, a lot of people a lot of time and headache.
That's right. Yeah, so Trevor, I love what you said there, and one of the things I like to tell my clients always is, if you have not spoken to a lender, you don't understand what that roadmap to home ownership is, and it's so important to know what that roadmap is. I talk to a lot of people every day. Some of them think they can qualify and they can't. Some of them think they can't qualify and they can. People do the wrong things sometimes, thinking that they're doing the right thing for their credit, don't they, Trevor?
You see it all the time. There's some clients that will go and start paying off collection because they think they're going to buy a house here real soon, so they start paying off collections. A lot of times that's not the best thing to do. They're wasting their money and they're actually hurting their credit scores.
And how many times have you seen people tell you, I know I get it all the time, I know you do, people tell you, hey, I've been paying so-and-so $500 a month to fix my credit, and they're trying to get their credit score up, but that isn't necessarily the pathway to home ownership.
That's exactly correct. They're wasting money on credit repair and stuff, and a lot of these credit repair companies are doing stuff that's actually hurting them now, as far as credit disputes and stuff, because in the mortgage industry now we can't even have disputes on there, so now they're having to go back and pay money to get them taken off as well. So I encourage people to reach out to me. It's free to do. I'll give them the advice they need without it costing them any money.
Yeah, and I want to be clear that I'm not bashing credit repair industry as a whole. I have some friends that are really good in the credit repair industry, and so does Trevor, that we both work with. There's a place for it for some people, but overall we just see a lot of it that seems unnecessary. So, especially when you've got somebody like Trever that you can go to and get free advice that'll actually get you toward that goal of homeownership. So Trever, before we let you go, I know a lot of people are probably wondering, can you give us an overview of kind of the minimum guidelines buyers are looking at in the market today?
Sure. Minimum guidelines, depending on what type of loan product and stuff, but we do loan credit scores down to 600 on a borrower, and then from there it's pretty simple. As far as whether they have the cash for down payment and closing costs in their bank, we can also look at gifts and different gift programs out there that are available for first-time home buyers and stuff. But the main thing is the credit score being above 600 and the debt-to-income ratios being in line. And as a general rule of thumb, debt-to-income ratios for the purchase of a home is about 35% of your total income, gross income, before they take taxes out. The second part of that ratio is roughly 45%, which equates to your house payment, taxes, and insurance, plus your other bills. So they'll allow you to use about 45% of your total gross income.
Well, that's great. Everybody throws around the term debt-to-income ratio all the time, and you just explained it really well and it made it easy to understand. So thank you for that. Well, thanks again, Trever, for coming and sharing with us today. We're going to do some future videos with Trever. We're going to get more in depth into things like credit score, debt-to-income ratio, some things we talked about today. We'll go deeper on some other shorter videos. I wanted to introduce them to you today. I talk about them a lot, have over the past 10 years. Trever, how do people get a hold of you if they need to talk to you?
Anytime you have any questions, concerns, or need help with a mortgage, please call me at 972-822-7408, or you can email me at Trever, trever.kerr@gatewayloan.com. Look forward to speaking with you.
Thanks, Trever, and stay in tune.